With its vast resources and diverse population, Nigeria has been considered a hub for multinational companies looking to tap into the African market. However, in recent years, an unsettling trend of some companies exiting the country raises questions about prospects and challenges of these companies face, or the challenges these companies face in operating within the Nigerian business environment. But what are the prospects for 2024? And can this be addressed? To discuss this, I'm being joined live from the United Kingdom by an investment strategy manager with AfriInvest West Africa, Mr. Temitope Omoshuyi. Great to see you. Happy New Year, Mr. Omoshuyi.
Thank you very much, Tolu. Great to be with you today.
Well, you're an investment person, and I know that you will not be happy with some of this news coming in. First, it was Unilever in March, something around that. We had Procter & Gamble. Now, yesterday, Shell is also planning to sell, a great part of the troubled onshore oil after nearly a decade. What is your reaction to all of this?
All right, thank you very much, Tolu, once again for this conversation. It's very important to just stress that at this point in time in Nigeria, investors are going through a lot. In fact, every stakeholder in the country is going through a lot when it comes to the challenging macroeconomic condition, from Nigerians to investors and even just financial market players across the economy. The challenging macroeconomic condition is making it a lot more difficult for people to stay afloat. So if you take it to the corporate angle, which we are discussing right now, it is also very challenging for them, especially from the angle of instability in the FS markets. We have seen some reforms, or we've seen some moves by the central bank since last year, June to be precise. But what investors are looking at, they are actually watching the outcome of these reforms. So for the Shell that you've just mentioned, we've seen a couple of other oil companies that have exited their onshore businesses because of the challenges they go through in that space. That is not even to talk about the exchange rate factor, right? The onshore business of these companies have gone through a lot of problems, particularly operational issues, because they've been grappling with issues around oil theft, and also vandalism of their operations. Just imagine a company that have spent some tens of hundreds of millions of dollars or even billion, right, constructing pipeline and other facilities to ensure a seamless flow of of their product from one point to another, and this operation is disrupted. They are grappling with a lot. They continue to make losses if they don't review their strategy. And to be candid, or to be true to these companies, from Shell to ExxonMobil, Eni, and a number of others, right? They had to just begin to look at how to. Some of them have exited, and Shell is just the one that we're talking about right now. They also want to exit because that part of the business is not becoming profitable for them, although they still have exposure in other areas or other value chain of the oil sector. But for that area of the value chain, they are exiting because of the risk of doing business there, in addition to the fact that they are losing a lot. Business is all about profit maximization. Yes, there are other objectives, your other social impact, but if they are not optimizing profit, they've taken money from investors. Investors will continue to ask questions about profitability. They continue to ask questions about their growth prospect. But if they continue to grapple with those challenges, I think they are making the right decision, because it's all about meeting the needs of their stakeholder, the business stakeholder. So the onus lies on Nigeria. The onus lies on Nigerian government, federal government, to ensure that all of these challenges are addressed. Otherwise, we'll continue to be on the back foot when it comes to foreign investment, because Nigeria is not the only game in town. A lot of other countries are deliberately putting in place policies and reforms that will make those economies attractive for investors. Investors are looking for return. And it's even quite difficult right now when you have to compete with advanced economies. If you look at what is happening at advanced economies, we are seeing interest rate that is, at the highest level in decades. So I would prefer to put my money in US Treasury. That'll give me 5% than having to lose both return and capital in Nigeria because I'm exposed to the onshore part of the Nigerian sector. So all of these factors are really affecting businesses in Nigeria. And it's also very important to even stress the angle of exchange rate. Last year we saw that the Nigerian stock market gained by more than 40%. On the flip side, exchange rate also, went down. The exchange rate of naira to dollar or dollar appreciated, by over 40 or 50%, which means naira weakened by that by similar magnitude. So in essence, if foreign investor has committed money in the Nigerian stock market, do you know what that means? You have gained 45% on the one hand, but on exchange rate angle, you have lost more than that, which means if you net off the two, you are already doing negative return. It was not surprising to see that Nigeria's capital importation last year was really abysmal. In fact, I think it was the lowest since 2005 when you look at it on a quarterly basis. And it's just a reflection of the condition, the macroeconomic condition of this country. Like I said, investors are not emotional about a country. All they want is safety of their investment and a bit of stability in terms of the return expectation. And so, if I may ask you, about the certainty of what is happening in Nigeria, there's a lot of uncertainty in the air. Let's start with the central bank, right? The market is still concerned about the policy direction by the central bank. The last major communication we saw was the event that was held by the Chartered Institute of Banker of Nigeria, where the central bank governor stated some of the things the authority intends to do for the year. But as we speak, we haven't seen major things that should guide, businesses and guide everyone in the economy. The question is, when is the next MPC meeting to even guide investors on the direction of monetary policy? Another point is, the central bank governor talked about a comprehensive FS framework that will guide FS strategy. We haven't seen that as well. In addition to that, what about the what about inflation target? Have we changed it, or do we still have the same thing? All of this communication needs to be put out there so that investors will know that this is exactly what we are doing. In addition to that, if you look at the fiscal side, there are a lot of uncertainties in that regard as well. And if I'm a foreign investor and I'm to analyze Nigeria, all I need about Nigeria is data, which is why advanced economy or emerging market that are tending towards becoming advanced, they don't joke with information, certainty, and data. We are now in a period in Nigeria where there's paucity of data, and investors cannot make decisions if they don't have data. At this point in time, if I ask what the foreign reserves of the CBN is, we don't really know to an extent. So all this data and other leading indicators, about some years back, say 5 years ago, you would get from the CBN Purchasing Managers Index, Consumer Confidence Survey, Business Confidence Survey, credit condition, inflation expectation, and a number of other data that the investor can easily look at these things to judge the condition of the economy and where opportunities are. But right now, it seems there's a lot of uncertainty. And if this continues, investors will continue to sit on the sideline, and foreign investors in the country as well, will continue to exit. And I think lastly, if you look at, I believe you also follow the stories about many companies that are touching 1 trillion on the Nigerian Stock Exchange. But the question is about the real value of these companies, or even of the existing foreign direct investment in the country. Imagine in let's say 2016, you committed 1 trillion naira in Nigeria, and that has grown to 1.5 trillion in terms of the value of your company. But when you adjust for exchange rates, within that period, exchange rate has increased, naira has depreciated substantially. The value of dollar has gone up by over 200%, which means that even though your money, right, your investment, 1 trillion naira has improved from 1 trillion naira to 1.5 trillion by about 50%, but exchange rate has worsened significantly such that the value of your investment is nothing anymore. So if we don't get to a point where we ensure that FS stability is on the front burner, and we also have a sophisticated financial system that help investors to manage FS instability, investors to continue to stay on the sideline. We'll see exodus of important investors in the country, and the new ones would continue to watch. You continue to see promises and promises that, oh, they are bringing money to the country, good reports from top institutions, and we will not see the actual money. Thank you very much.
Brilliant. I agree with you that the central bank must come out plain, talking about policies here, monetary policies, the MPC meetings, because all of this will shape the decision of any investor. So I know many of them are sitting on the fence at the moment, looking in and seeing how they can put their money here or they shouldn't put their money in that country. But let's stay with some of those challenges. And now, we've had some that has led to legal issues that have lingered for so long. You hear people suing themselves for business dealings and all of that. Policies and regulations. Are there quick wins for Nigeria at this time? Tawo Edele's Committee on Fiscal Reforms is to come up with suggestions that would also help government shore up revenue, do things more properly. But let us understand that are there quick wins with regards to policies of government that can help attract foreign investments at this time, confidence back into that market?
So I really think that the first thing would be for us to see a major accretion to our reserves. In fact, before going to that, I think we have to address other fundamental questions. So, but for foreign, foreign investors, you have the foreign portfolio investors who are just interested in financial assets, while we have the foreign direct investment or investors who are interested in doing business, investing in real business in Nigeria. So I think for a start, what we need or what we are likely going to get this year is foreign portfolio investment or investors. If we do some urgent, things, one of which is to look for how to ensure that our reserve is prompt up, this has to come from different angles. What are we doing to oil production? Because at this point in time, despite a bit of moderation in oil prices, is still way attractive for export. We have to look at what is going to improve our reserves, and we have to also look at what's our security condition. Foreign direct investors are not coming if we don't address security issues. I cannot afford to build a factory in Kano and the next day is set ablaze. I cannot afford to build another one in Badon and I wake up to a call that is already burnt down. So we need to, as much as we want foreign investors, we have to show commitment that we are ready by addressing our insecurity challenge. In addition to that, Nigerians, I think even our leaders must also show commitment that they are ready. Investors are able to delineate between talk and action. For instance, we talked about senators that mentioned their interest in imported cars. For every dollar, you have, there's a real value for it somewhere. So if you print naira against the limited dollar, what happens? Exchange will go up. So the fact that we wanted to import cars, right, means that there was a pressure on exchange that happened at that point in time. I mentioned to a couple of people that I didn't even have problem with with expenditure, but I have problem with the quality or the structure of the expenditure. There's no problem in getting a car or getting expensive cars, but if the cars are produced in Nigeria, right? If the cars are produced in Nigeria, Nigerians will benefit from the value chain. But if we are to import, if we continue to put pressure on the FS market, then investors will sit on the sideline. So we have to show commitment. In addition to that, I talk about clarity. Today, if the CBN begins to communicate effectively, right, from today, you begin to see more commitment. The investors will only help you to tell the story you have told them. If you have checked a report from top financial institutions across the globe about Nigeria, they only told us the story that we have pushed to them in terms of currency unification, subsidy removal, among other policies. So we have to continue to communicate. What do we want to achieve with inflation? What do we want to do on the FS leg? What do we want to do in terms of our fiscal deficit that is a bit disturbing? And what are we doing on the angle of, debt stock to GDP, that is the fiscal sustainability condition. So we have to look at all of this. And if we want to get foreign portfolio investor, like I said, exchange rate is the number one, because I, as a foreign investors, cannot afford to come to Nigeria to get 15, 16% on government local bond. And the expectation is that I'm going to lose another 30% on exchange rates. So 15 minus 30, I already have lost 15%, even though I'm getting 15% on the bond. So exchange rate is on the front burner. So if we now want to convert those foreign portfolio investors into foreign direct investment, then we can now begin to talk about fundamental factors that I've mentioned. One, security condition. Two, infrastructure. We have to begin to look for innovative way to drive infrastructure. Like I said, Nigeria is not the only game in town. In fact, China, right now, because China is not getting so much investment from the US anymore due to the trade war that started in 2018, right? They have started attracting other economies like, the oil-rich Middle East countries into China. They are putting a lot of money in the country right now. Same for India. India is looking at a growth of over 7%. In the next few years, and they are very close to that, right? They are growing at over 5, 6, 7%. But Nigeria, in terms of the growth or the economic size that the president or this administration is looking at, $1 trillion, right? It will take about 7% growth to get to that in 2030. But right now, we're even struggling to grow at 3%. So if we don't address all of these, those numbers will just be a pipe dream. Investors will continue to write good reports about Nigeria that, okay, once they see those parameters change, they will bring money. But as we speak, we are not the only game in town. Promises are not actual money. For instance, the presidency also talked about the fact that when they went for roadshow and all of that, they got commitments in terms of promises worth more than $10 billion. But Tolu, you agree with me that promises are not actual. I can promise you something today, and tomorrow, if I see that those factors are not favorable, I will renege on my promises. True. And if I see that there are other alternatives, I'm going to renege. So I think that we have to first, how do we bring in foreign portfolio investment? So foreign portfolio investment, over time, if we address those fundamental factors, they cannot move from portfolio direct investment and real businesses in Nigeria.
I like that. Kind of, let's manage our expectations, right? Well, finally, before I let you go, despite those challenges, the policy shift and all of that we've seen from government, according to them, 8 trillion naira is to be saved from subsidy removal. But Nigerians will also ask, where will that money be channeled to? World Bank is saying that Nigeria's growth is revealed. It looks better. These policies are the right way to, right steps to take, and government has taken it. What do you make of these figures? What do you make of the outlook for the new year?
Well, the World Bank is looking at 3.5% growth for this year, 3.7% in 2025, and they've even projected that by 2025, Nigeria's growth or per capita income would be restored to the pre-pandemic level, that is 2020 level. But the point is, even as at 2020 levels, per capita income of 2020 level was as ridiculous as a per capita income in 1980s. What does that mean? It's more like we want to go back to the best of the worst condition. It's been worse since 2020, but we want to achieve the best of the worst. So that is not the expectation. A prediction is a prediction. World Bank, IMF, and all that can come up with prediction that this is where they think the country can go, or this is where the country will be. Nigeria has all the tools, has the ability to take ourselves to where we want to be. E.g., we saw that last year, in fact, 2020, many analysts across the globe predicted that the US economy was going to enter a recession. But surprisingly, in Q4, to be precise, we saw 5.4% growth, beyond expectation. So a country will determine where she wants to be, irrespective of the prediction. Yes, we talk about savings from fuel subsidy. Savings on the one hand, what is happening to our expenditure? and what people want to see is the impact on them. We talk about the fact that our subsidy has been removed, and we want to begin to we want to consolidate government fiscal policy. Are we seeing the real consolidation? Where have we cut revenue? Where have we cut expenditure across our expenses components? Are we doing that irrespective of saving from subsidy? And lastly, yes, we understand that government is going to save from subsidy, but there's no place in the world that you won't find subsidy. Yes, we understand why the subsidy has been removed. But so we just think that it is very important for us to address some of these issues. We don't even need to talk about savings from subsidy anymore. I think what is important is what we are doing with the subsidy. Do we have an efficient transport system in Nigeria? In advanced countries, they're also going through issues around increase in fuel prices, but there means and medium of transportation that won't even make it to even know the price of PMS. So if there's adequate transport system in Nigeria, electricity supply is stable. All the needs or all the derived demand, or I would say composite demand, right, for PMS, if they're addressed, you don't even need to bother yourself much about the price of PMS. And I think that the savings should be channeled to infrastructure, to be channeled to transport system that will alleviate the impact of rising prices on people. Because for any country to remain stable in the next 5-10 years, two things are important: food and energy security. And the question is, show me a nation that is highly developed today that does not prioritize food security and energy security. Food security in terms of the supply of food and at an affordable rate. Energy as well. The supply of energy, adequate supply and at affordable rate. We are looking at Dangote Refinery to help in that regard, but what are we looking at in terms of affordability? Because Dangote Refinery is a private business, they're going to sell at market price. So affordability has to be considered. Yes, that in a way to address security and food supply as well. How is insecurity affect food supply? So if we don't address all of this concern, then it's a long ride for Nigeria in terms of this gloomy condition. But once all of these things are addressed, I think we're on a good path. Nigerians don't care about savings. Nigerians don't care about subsidy savings. What they want is, how will inflation drop from the 28%, 28.9%, or how would they don't even care about the numbers. They want to see the impact in the market. They want to see the impact on employment. They want to see the impact on security. So they want to see impact. They wake up in the morning, go to hit the street, they see that the roads are okay. They go to the healthcare sector, they see that it is okay. They wake up, they won. There's still electricity supply. There's electricity. 1 month down the line, there's no interruption. So these are what we need to address with the money. No one cares about savings, but the impact on the lives of people.
Well, interesting charts with you as usual there. I've been speaking to investment strategy manager, AfriInvest West Africa.